After September 11th, no one wanted to insure commercial properties, like office buildings and warehouses and shopping centers, against acts of terrorism. This created problems because without insurance, the banks didn't want to lend any money to build or finance these properties. Those who could obtain financing only did so at very high costs, which had to be passed on to their tenants, who eventually passed those costs on to all of us, their customers.
Naturally, these costs that are paid by the insurance companies are passed on to all consumers.
The banks need to work with them for some flexible lending standards.
Eventually, Congress had to step in with the Terrorism Risk Insurance Act, creating a federal reinsurance backstop program and requiring insurers to make terrorism coverage available again, along with their usual property and casualty risk insurance.
How much can you afford to self-insure?
The classic answer is the government's going to pay for it anyway. So why don't we have that? And that is a huge debate.
The act was reauthorized in 2005 and again in 2007. But unless Congress takes action, the act will expire on December 31st, 2014. Now, if that happens, our entire commercial real estate market, which is still recovering from the real estate bubble, could be affected. In fact, some insurance companies are already including springing exclusions in their policies, which say that if the act is not reauthorized, their policy will not include terrorism coverage after December 31st. The trick is to reauthorize the act while at the same time shrinking the taxpayer footprint, bringing more surety to the market, and increasing the overall amount of risk that private insurers are able to take on over time.
We're working toward is the mitigation of costs toward insurance, which are rising drastically.
Tell us what you think about extending the Terrorism Risk Insurance Act and keeping the commercial real estate we all count on every day safe and secure.